Imagine investing in a company backed by Nvidia, one of the biggest names in artificial intelligence, and suddenly the stock crashes, your heart races, headlines flash, CoreWeave plunges. Is it a sign of deeper trouble or the kind of dip that savvy investors dream of? Today, we're diving deep into the unexpected tumble of CoreWeave, the AI infrastructure company once hailed as the future of cloud computing. Is this just a market overreaction or a red flag you can't afford to ignore? Stay tuned, because what we uncover today could change the way you view AI investments moving forward. Hey everyone, welcome back to Dividend Dreamer, your go-to channel for deep dives into disruptive stocks, financial trends, and market-moving news that matters. If you're new here, make sure to hit that like button and subscribe so you never miss an opportunity to stay ahead of the curve. Let's start with the basics. What exactly is CoreWeave? CoreWeave is a cloud infrastructure startup that's been making waves in the artificial intelligence sector. Unlike traditional cloud providers, CoreWeave is optimized specifically for AI workloads. Think machine learning, generative AI, and high-performance computing. Why does this matter? Because the demand for AI infrastructure is exploding. Companies from every sector are racing to integrate AI, and they need powerful, scalable computing to make it happen. That's where CoreWeave steps in, with hardware and software solutions designed to run these intense workloads faster and more efficiently than legacy systems. Now here's the kicker. Nvidia, the GPU giant and a major player in the AI space, backs CoreWeave. That alone brought major attention to the company and its valuation. Just a few months ago, CoreWeave was riding high. Valuations soared and investors lined up, betting big on the future of AI. The Nvidia-backed cloud firm raised billions and was projected to compete with the likes of Amazon AWS, Microsoft Azure, and Google Cloud, especially when it came to AI performance. The hype was real. Some even dubbed CoreWeave the next big thing in AI infrastructure. So what happened? Why did the stock suddenly crash? CoreWeave stock dropped sharply following a series of concerning developments. Valuation correction? Analysts began to question whether the company's valuation was too aggressive. Despite its rapid growth, CoreWeave had yet to turn consistent profits. And with interest rates still high, investors started pulling back from unproven tech. Market sentiment. The AI sector in general has seen a cooling off. After months of AI hype, investors began reallocating funds to more stable dividend-paying companies. CoreWeave, like many tech startups, felt the pressure. Whispers of overdependence on Nvidia. Being Nvidia-backed is a strength, but also a potential weakness. If too much of CoreWeave's performance is tied to Nvidia's hardware or partnerships, it raises questions about long-term independence and risk. All of these factors collided, and the stock price took a hit. So now we ask the million-dollar question, is this crash a buying opportunity? Let's look at the upside. Strong tech backbone. CoreWeave is still one of the few companies laser-focused on AI-native infrastructure. That niche focus gives them an edge as demand for AI computing rises. Nvidia's confidence. Nvidia doesn't just throw its name behind anyone. Its continued support, financially and strategically, shows a long-term bet on CoreWeave's success. Growth potential. The global AI infrastructure market is projected to reach hundreds of billions in the next decade. If CoreWeave captures even a small slice, it could be massive.
For long-term investors with a high-risk tolerance, this dip could be an entry point.
But we can't ignore the risks. Unproven business model. CoreWeave is still building. They're not yet profitable, and their revenue streams are tied to fast-changing AI trends. Competition is brutal. Big names like Amazon, Google, and Microsoft are not going to sit back. They have deeper pockets, more infrastructure, and established client bases. AI bubble risk. There's a real risk that parts of the AI sector could be in a short-term bubble. If AI adoption slows or investor sentiment shifts, startups like CoreWeave could suffer more than the giants. So for cautious investors, this might be a warning, a reminder not to let hype override fundamentals. So is CoreWeave a sleeping giant or a speculative gamble? That's the beauty and the danger of disruptive tech stocks. Backed by Nvidia, CoreWeave still holds major promise in the AI infrastructure space. But investors should tread carefully, weigh the risks, and decide whether this crash is a buying opportunity or a red flag. What do you think? Are you buying the dip or sitting this one out? If you found this breakdown helpful, make sure to like the video, subscribe to Dividend Dreamer, and hit that notification bell so you stay informed with our latest deep dives into the market's biggest movers.